Hello everyone, welcome back to the Quiet Trail series. I'm Trace by Ibra, and this is episode 5, and this is part 2, where we're gonna see breaking structure versus market structure shift. So let us remove some confusion. So immediately, this is a continuation of episode 5, part 1. So break of structure and market structure shift. A break of structure or breaking structure doesn't occur on lower time frames. Then, that is the first point you need to understand. A break of structure or a break in structure, I've been seeing some people just treat it as a market structure shift, like they treat it equally, but that's not the same thing. A break or a break in structure, we're gonna see what it means or where utujisanga. Okay, so they look identical, but the time matters, right? Because they have the same structure. Like formation yaefanagana, but a break in structure tebela lower time frame. That's the only point you need to understand. A break of structure or a break in structure takes long to break structure again. In that trend, let it be bearish or bullish. When you break a structure, it takes some time for it to break structure again. We break structure while we are changing trends. If we are bearish, we break in structure going into a bullish trend. That trend is going to take some days okubange vamo your trend. So that is a break in structure. They have the same structure or they have the same formation like a market structure shift. Okay. Then the market structure shift is just a shift in a buy or a sell program. We're going to see that. So that's not a break in structure. To me, I more trust a 4-hour time frame and above. I consider that a break of structure or a break in structure. Anything less, the maximum is 15, is just a shift. Now, for the time frames, we all have different models. You have a different model and it has a higher time frame. Now, to me, I like the 4-hour because I'm an intraday trader. Okay, so let us start with the bullish structure. Let us say we have some liquidity in here. It could be an old low. Okay, so social liquidity or any higher time frame array. It could be a fair value gap. You're gonna see that in episode 6. We're gonna talk on liquidity and PD arrays and how to use them. So just stay along. So price drops there, comes back into that range, takes or sweeps that liquidity, then it comes back into that range. Now we start to anticipate a smart money reversal because we have taken a higher time frame array, or we have swept a higher time frame array, right? We start to anticipate a smart money reversal. So if price comes back into that range, okay, it will still continue to the downside. But if it does this and breaks this high or swing high, okay, that to us after taking out liquidity, it's gonna be a market structure shift from this bearish structure to the bullish structure. So still that can be a break of structure on a higher time frame, right? So this is a market structure shift stroke a break of structure or a break in structure. They look the same, but the time frame yejaula, right? Now this is gonna take long on a higher time frame. If this is a break of structure, it's gonna take long for it to come back to the bearish trend. That's the only change. In market structure shift, we can have this and also just sweep those short-term liquidity. Then we shift back into a bearish trend, right? So price is gonna come back in here. We're gonna see a raise is better within the range we're finding our setups to anticipate price to move into the direction where we recorded the shift, aiming for the liquidity JB from that bearish move. So with the bearish structure, it's gonna be looking the same. Liquidity is gonna be there, an old high, and it's gonna be buy side liquidity. It's gonna be any higher time frame array. So price is gonna do the same thing. So it takes out or sweeps out the liquidity. We start to anticipate a smart money reversal. So price, when price breaks this low or shifts from this bullish move, it is a shift. So it creates a bearish market structure shift or a bearish break of structure on a higher time frame. They have the same structure, but the time frame. So it goes back into that range, then it's going to drop to the other liquidity that was created when price was moving into that buy side liquidity. Okay, so there is no market structure shift on higher time frames. We only have break of structure, but they look the same as you're seeing it here. So with that said, let us have a chart here. So this is Nasdaq 100. It is a 4-hour chart, right? Now njaga tunuye price eno mutwalo gumu mukasanvu mu 14.1, right? It is that low there. It is on what time frame? On a 4-hour time frame, right? Now I'm gonna zoom in here where we took out that low and we started that. Okay, so njagala tusigale nga tutunya price and like have it in mind when we are dropping lower. So with this zoomed in chart, see the same price mutwalo gumu mukasanvu mu 14.1. Okay, so we are seeing an intermittent low here. We have a short term low and a short term low. We get an intermittent low. Price trades back, we get a swing high. Also, like I'll validate this one and this one. Okay, so because this is the swing high that we have within this run, so this is also there. You should also watch it. But I will use this one because you're in a run, run in a taking out that and that. So okay, that said, to in an intermittent low here after taking out what that low jitulabe on a 4-hour eno. Now njaga tunule gino emyezi wansi. This is February, this is March, this is April, this is May. So this happened at the end ng'omwezi guggwako gwa April 1 munaku za 22 around there. So tandika this bullish trend at the end of April nga tugenda mu May. Alright, now this is a break of structure. This isn't a market structure shift. It's not a shift, it is a break. Because when did it, like tugambe yatandikide mu May even to be bullish, but one we yatandikira okubeera bullish, right? So we break in this bearish structure. Now the market broke. Is a market, like it is a break in structure. It's not a market structure shift. Kubanga tuli mu May moving nga kyekimulaba ne mu August, sorry mu June esigala eri bullish. So this is not just a shift, it is a break in a structure. Break taking along okudda mu structure endala. So if this is a break, the market we anticipate the market to be bullish for a good time. Ate nawa kuddamu ku breaking structure, right? Okay, let us have a bearish chart here. So when you look here, we have this old high here. So price yagiyitamu. Okay, this is why we don't just sell when that high is taken. We are looking for a structure okulaga that the market is going to be bearish. So how do you know that this is the high market wegenda okubanga it was smart man reversal? When you look on this high, right here, but there no right yali eno or right yali low endala yali eyo. We are looking on price reaction of that high, because when price is dropping tutunja zino low, sorry madde zita high zina kuba low, sorry. So when price reached that low nesikanage pushing a lower, okay, nga tu adjusting naffe nga tunywa this low netufuna that reaction. Which reaction? Reaction yen. So we don't just randomly say that market is reversing because it has took out a swing low or that low, that old low. Okay, the same now. What we are here, I want us to look onto the price in mujukira mutwalo gumu mukasanvu mu 10 So price yasigala nga eri bullish, ya breaking a structure again neddamu okusembera this price D. Okay, so when I zoom in here, the same chart, we're taking out that old high. Price tiakola kintu kyonna kiraga kibeera bearish, so we are continue to be bullish. Watugasigala tuli bullish. Tugambe just a pullback or a retracement, ke kali ka retracement ke tulabe, then damu ne continuing. Okay, so mu continuing, this could be a day wayagala okugenda long and you were stopped out. Okay, you stay on the sidelines, now you're watching. Am I having a break of structure or a break in structure? Chobo tunulira, chobo genda okunonya. Okay, so we have here fair value gap. We're going to start in episode 6. Yeah, we're going to get a fair value gap and liquidity and PGRs. So this is a swing low because that low is higher and that low is higher. This low is lower on those candles as mobile, so it becomes our swing low. No, it's swing low because that low is higher and that low is higher, becomes a swing low. So displacement really huge on this candle. Market displacing chinene new. So since this is a 4-hour, this could be a target of this imbalance. So you could find setup to be aiming for the encroachment of that 4-hour fair value gap. That's tradable since this is a 4-hour time frame. So if like you see a point to break of structure and breaking structure, all right? So break of structure ebera ku time frame, right? Yes. So price otunira wano kuva mu July tugenda paka mu August. So the market has been bearish. That is a break in structure or a break of structure. It's not a market structure shift. Now, if I could hide the time and I brought back the same chart, this is the market structure shift on sub 15-minute time frame. It's a market structure shift. You could 1 minute, 5 minutes, 3 minutes. This is a market structure shift. It's not a break in structure. So it's gonna be looking the same thing. You're gonna call it the same thing. So time okubanga, like everything that is printed on higher time frames is also printed on lower time frames. Bifanagana. But having a higher, like the longevity of the narrative jobera oyina etekeddwa okubanga eri framed on a higher time frame. So if I'm having this on a 4-hour time frame, that means there's gonna be a longevity of a bullish trend. Stegera ekigenda kuba nga kiwanvuko kusinga ku lower time frame because the analysis of needed at higher time frame naye kifaanagana nekya lower time frame. This could be a 1 minute or a second minute chart. So with that said, let's have the last part. You can see that we got this in mid-July, then we got that in August. Like this is tradable. That's like a month. Okay, the last part yabadde the truth about market structure mistakes. Now tugatunga mistakes ki ezibeera mu structure. What you need to know is that the market doesn't do mistakes, accept it or not. Then who does the mistakes? That could be the question. The answer to me is the trader, the humanity. Like every human akola mistake, but the market does not do mistakes. You need to understand that, and you need to set that as a mindset to you. Is the error on our part, your part, not the market's? Now, what mistakes can the market like zisobola okubanga etutrappingamu ne tufiiringa that the error was on the market because of what we have studied, ne tulowooza nti market yakoze mistake, yet it is our mistakes because the market doesn't do mistakes. And if you saw that someone didn't see that, so this is really gonna be impactful that you should be moving alone. You don't need anyone's opinion on the way you find setups. So the number one thing is you not having one-sided bias, like the anticipation, like the narrative part, which we are gonna see in episode 7. Okubanga toina understanding where the market is gonna go. You're 50-50. Yeah, there is always that time ubanga osobola okubanga toina anticipation, like you're not one-sided. The market yakwate those conditions. Okubanga oli 50-50. Most times kibeerawo, or sometimes kibeerawo. So that means you need to change in the way that you're gonna engage, because it is gonna be a high resistance day. Market egenda kubanga teri one-sided. So kigenda kubeeramu hard finding a bias because you're finding 50-50. So that's the error on your part. Either you wait, you not trade. So if you trade, the error is not on the market. If it goes the opposite way, jobadolo that you're going to get. So the next part is not understanding the premium and discount zones in a particular dealing range. Because market ain't disrespecting BC when it's moving higher. Twatwagala just wikingemu katono then eyamuke. But ogenda kulaba nga BC bagiyisemu ne bajja ku BC eri mu discount zone. So that's an error on your part. You need to understand premium and discount zones in a particular dealing range. We shall also see that in liquidity. That is episode 6. Then, always expecting the market structure to be the exact structure of the old price action. Now, they're not going to be the exact, but it is the framework. Like it is somewhere you go and find something you start with, then you go back testing, you log in, you will have different templates. You're going to have a lot of templates. Chantekeza with templates is, if price does this, I'm doing this. There's no one who is going to tell you everything, which te guarantee. Price when I call a chino jacola, but price when I call a chino gonna call it. No, it's going to be you. You're going to do the back testing, you're going to journal everything, and you're going to understand that if price does this, I'm going to do this. Those are the templates. So Kubango having when you do back testing, later, ojakola forward testing. But you can't do forward testing at all back testing on how you're going to be engaging into that forward testing. So you must do back testing with the times that I showed in, I think it was episode 3. Yeah, we talk about sessions. So we are going to have more in episodes 6 and 7. So with that said, those are the 3 mistakes that we have. The market or the structure doesn't have mistakes. No. If it does that, then you were wrong, and that's the error on our part. Like every human akola mistake, but the market is coded to do what it does. So it's you to understand that, and you use that as a lesson to have that template also. We both need a mistake. So I think that's it for this episode. Let us catch back in episode 6.